The breakout probability, Expo, is a valuable indicator that calculates the probability of a new high or low and displays it as a level with its percentage. The probability of a new high and low is backtested, and the results are shown in a table. This will provide a sample way to understand the next candle's likelihood of a new high or low. In addition, the indicator displays an additional 4 levels above and under the candle with the probability of hitting these levels. The indicator helps traders to understand the likelihood of the next candle's direction, which can be used to set your trading bias. This indicator is a perfect tool for anyone that wants to understand the probability of a breakout and the likelihood that set levels are hit. The indicator can also be used for setting a stop loss based on where the price is most likely not to reach. Take note, before ever planning to apply the breakout probability Expo indicator in the market, make sure to master its application for the continuation of trends before switching to the reversal trading strategy as a beginner. How can traders use the breakout probability Expo trading indicator in the market? To apply this trading indicator for bullish anticipation, look at the daily or a higher time frame to get your bullish trading bias. Then go to a lower time frame and look for bullish setups in that uptrend direction. Let's study the weekly time frame of the British pound sterling paired against the Japanese yen. As we can see, the trend was in a strong bullish trend. Technically, we should only be watching out for a buy entry. After the price made a bearish pullback from the weekly gravestone candlestick here, the price tested the previously broken resistance structure here, and there was a lower shadow at the end of the weekly candlestick, and the price level closed at $158.47. This long lower shadow gave a bullish sentiment. The breakout probability Expo indicator gave a strong probability ratio supporting bullish anticipation on the weekly time frame. The win rate is 735. The loss rate is 310. And the profitability ratio is 70.33%. The next step is to navigate to the daily time frame to relate the profitability ratio to the weekly time frame. On the daily time frame, the win rate is 3,663. The loss rate is 1,537. And the profitability ratio is 70.44%. Traders can proceed to buy this setup. Since the daily time frame breakout probability ratio aligns with the weekly time frame ratio, we can see how prices proceeded upward to hit the previously higher swing. To apply this trading indicator for bearish anticipation, look at the daily or a higher time frame to get your bearish trading bias. Then go to a lower time frame and look for bearish setups in that downtrend direction. As we can see, the weekly chart of the New Zealand USD currency pairs was in a strong bearish trend. Technically, we should only be watching out for a sell entry setup. After the price made a bullish pullback to retest the previously broken support structure at 0.65308, price carved a spinning top candlestick. The breakout probability Expo indicator gave a strong probability ratio supporting bearish anticipation on the weekly time frame. The win rate is 733. The loss rate is 295. And the profitability ratio is 71.30%. The next step is to navigate to the daily time frame to relate the profitability ratio to the weekly time frame. On the daily time frame, the win rate is 3,651. The loss rate is 1,464. And the profitability ratio is 71.38%. Traders can proceed to sell this setup. This is how to use the Breakout Probability Expo indicator to detect powerful trade setups in the market.